Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Recently, I made a video breaking down the two most common business structures that people start with. On one side, you have a sole proprietorship, which is the simplest and most straightforward way to operate a business. On the other side, you have an LLC, or a limited liability company, which separates personal and business assets and protects owners from personal liability, from business debts, among other benefits. One is basic, one is protective. Both serve a purpose depending on your goals. But today we are moving one step deeper. We're going to talk about your EIN, aka your employer identification number, and the hidden benefits that most business owners never hear about. Many sole proprietors and single member LLCs are not required to have an EIN if they don't have employees. They can legally file using their social security number or their individual taxpayer identification number. And on paper, that does work. But if you plan to build business credit, secure funding, or position your company for growth, getting an EIN is not just recommended, it's a strategic move that you need to make. So in this video, I'm going to explain why your EIN matters, the advantages that no one really talks about, and how you can use it as a tool to access capital and build real business credit. So without further ado, let's get right into the video. If you're interested in starting a business and building business credit, you've probably seen a request for an EIN, or employer identification number, in forms for applications of all kinds, including business loans, credit cards, and bank accounts. The Internal Revenue Service, the IRS, created the EIN in 1974 as a business identifier and uses it to keep track of taxes that are owed. Today, it's advantageous for small businesses to have one, as it can open the doors to a variety of business services and help you build business credit. Strictly speaking, the IRS only requires certain types of business entities to have an EIN. However, you should consider getting an EIN if you don't fall in any of the categories, for three key reasons. First, most business bank applications require an EIN number. Having a business checking can increase your chances of getting a business loan, and having an EIN can increase your chances of getting a business bank account in the first place. Second, many applications for business services give you the option of submitting either an EIN or your social security number. Obtaining the EIN means you don't have to use your social as often. And third, EINs generally give your business an added level of professionalism, and they can be helpful when it comes to buying inventory, applying for loans and other services, or even networking. Getting an EIN is a straightforward process. You simply fill out Form SS4 with the online application provided by the IRS, and during that application, you'll need to provide information including your business name, your social security number, and your business structure, which can be an LLC, a corporation, a partnership, anything like that. Once your application is validated, you'll immediately receive a 9-digit number, and this is your new EIN. I've covered this in several videos about how to start your business and building business credit, and it's a very simple, easy process. Even if you didn't watch my videos, you can Google it and anyone can do this. And of course, an EIN is crucial for establishing separate business credit, as it identifies your business to lenders. Not to mention, some business credit cards are EIN only, which means you can't apply for them with your social. So if you pay your balances on time and you get these business credit cards, it's another great way to build business credit. So now that we understand exactly what an EIN is, let's talk about the first benefit of having an EIN number. So launching a business requires upfront investment. All of us know this. It takes money to make money, usually. And I'm sure you hear that all the time. So this means that there's a very good chance that you'll end up spending money to start your business. And this is really true no matter what type of business that you're starting. It could be as simple as lawn care, or it can be an e-commerce store. No matter what you're doing, you're going to spend some money to get this thing started. The IRS recognizes this, which is why they still allow business owners to deduct qualifying startup expenses that you incur while starting your business. You can spend startup costs on your first website, advertising, logo designing, branding material. Anything that is clearly part of setting up your company falls into that category of startup cost. And why that matters most is that you can deduct up to $5,000 in startup cost, and you can also get an additional $5,000 of organizational cost in your LLC's first year. And if your total startup expenses go beyond that limit, the excess amount doesn't vanish. Instead, it's spread or is amortized over a 15-year period. Having an EIN number itself isn't a specific specific requirement for claiming this deduction, but it's necessary for most business entities to file taxes, which is how that deduction is claimed. So I hope you understand why this would be extremely helpful for new business owners who are banking every dollar to keep this business alive. If your launch expenses remain under $5,000, the full amount is deductible immediately. So that means you could start the year with a significant reduction of taxable income before even earning your first dollar in revenue. Using an EIN positions your business as a distinct financial entity, making bookkeeping, tax savings, and long-term credit opportunities far more achievable. Now, if you want more information about this, I recommend that you consult with a licensed tax professional. They can definitely break down the benefits of using your EIN for this deduction. So again, if it's always on your mind that, I can't start a business, it costs so much. Hey, look, if you make money and you want to use this deduction, technically you can get it back and essentially start your business at no cost. Now, this next benefit seems obvious, but I'll get into why it's very important and kind of overlooked. An EIN allows you to open a business bank account, which is not only essential for claiming deductions properly, but it also is the foundation for building business credit, establishing credibility with lenders, and scaling your company in the future. Banks are not interested in approving a business based on someone's personal identity alone. They do want documentation, they want tax registration, and they want to see an EIN that's connected to a real entity. And without that, you can't open things like merchant processing accounts, you can't receive credit card deposits, and you can't separate income from business and personal, which is very, very important when you're trying to actually get not only business funding with SBA loans, but it's also important when you're trying to actually get EIN only credit cards. With an EIN, those doors swing open: a business checking, a business savings, a merchant account, payroll enrollment, vendor applications, and again, even SBA loan systems all begin with this number. It's like the passport into your financial world of entrepreneurship. And using an EIN makes bookkeeping, tax savings, and long-term credit opportunities far more achievable. It's like I tell everybody, yes, no doc loans and stuff like that is good. At some point, if you have a business, a real business, and you're making real money, you're cash flowing, you will need to have bookkeeping operations going. You need to have your taxes done. You need to have a business bank account. All this becomes important, especially when you're trying to do more than just stack credit cards and you're trying to leverage business assets. And I do want to answer a question that I'll probably get in the comments. It's yes, sole proprietors and some single member LLCs can open a business bank account without having an EIN number. That's absolutely true. However, while some banks allow sole proprietors to use their social instead of an EIN, others maintain stricter requirements regardless of business structure. These requirements stem from banking regulations and risk management practices, as institutions must verify the identity of their customers and maintain detailed records of their accounts. Not to mention, if you're applying for an EIN only credit card, it's normally not available to sole proprietors, and they most likely ask to see 3 to 6 months of business bank account statements. Moving on to our next benefit that most people don't actually think about, but it's hiring employees and paying contractors. It requires an EIN, but it also helps with some other things. So once the business grows beyond just being an owner and you begin hiring workers, an EIN becomes non-negotiable. The IRS requires businesses with employees to use an EIN for payroll taxes, withholdings, unemployment taxes, and W-2 reporting. If the company pays contractors, the EIN must be used for issuing 1099 forms. Without it, the company cannot classify labor correctly and must face fines or compliance issues. This is where many business owners get stuck. They scale because revenue increases, but their structure does not scale with them. They pay workers informally, they deposit income into personal accounts, and they try to manage taxes manually. This is how businesses collapse, not because sales fail or they can't make money, but because their structure fails. An EIN makes payroll legal, organized, reportable, scalable, and it keeps you compliant so that growth does not turn into a tax nightmare. And one of the most practical but overlooked benefits of having an EIN for payroll is that you can create your own paycheck stubs. So for a standard LLC treated as a sole proprietorship, you take owner's draw and you pay yourself employment tax, while an S Corp requires a reasonable salary via W-2 with payroll taxes, plus distributions for remaining profits. I have a video on this channel that shows you how to create your own paycheck stubs by paying yourself as an employee of your business. These could also be used for income verification. You could use this to get an apartment, to get a personal loan, to get an auto loan. I do my own paycheck stubs. I pay myself as an employee of my company, and you can too. But to do this, you need a payroll processor and you need to have an EIN. If you want to watch that video, I'm going to link it right here. But again, you have to have an EIN in order to do this. This next benefit is critical. Another area where entrepreneurs, nonprofits, small business owners often get caught off guard is federal grant access. Many people hear about grants that don't need to be repaid and immediately they want to apply. But what they don't realize is that the federal funding system is designed for registered entities, and the registration process itself begins around tax identification, and this is where an EIN becomes essential. If you plan to apply for federal or any government-backed grants, contracts, or research funding, you will almost always be required to have an employer identification number or a taxpayer identification number. So while there are rare exceptions for individual-based scholarships or, like, let's say a very specific personal grant, the vast majority of opportunities available through government programs are designed for organizations and not designed for individuals. So that means that applicants must be a recognized legal entity with a verifiable tax identity. When you submit a formal grant application, one of the first steps is registering with SAM.gov. SAM is the central database the government uses to track who is applying, who receives grants, and how those funds are distributed. Completing SAM registration generates a unique entity identifier known as a UEI, and the UEI becomes the federal tracking number for your business or organization. But to get that UEI, the system typically requires you to have an EIN or a TIN for verification and compliance. Grants.gov operates the same way. It connects applicants to thousands of federal funding opportunities, but eligibility is based on whether that organization has completed SAM registration and obtained a UEI and established a tax verification through an EIN. Federal agencies need assurance that grant money is going to a legitimate entity that's capable of tax reporting and capable of financial management and also capable of legally accepting federal funds. This level of oversight is not possible without an EIN number. The bottom line is, if you want to access serious capital, the kind that does not need to be repaid, the EIN is the pathway to do this. If you're planning to purchase a vehicle for your business, this becomes critical. You will almost always need an EIN to finance or register a vehicle under your business name. Without it, lenders typically default to your personal identity and treat the purchase as personal, even if you intended to use the car for business purposes. An EIN allows the vehicle to be recognized as a business asset, not a personal one, and that distinction matters for taxes, liability, and credit protection. So when you apply for business auto financing, the lender will ask you for your company's legal information the same way they would ask for your personal details if you were applying as an individual. This means your company name, your formation documents, your business address, and your EIN. With that EIN in place, you're able to open that business bank account, establish business credit lines, create separation between personal and business debt, and in many cases, prevent the loan from reporting to your personal credit profile. That separation becomes extremely valuable over time because it allows you to scale and borrow from your business without inflating your personal credit utilization or increasing your personal debt to income ratio. I recently released a video that shows you how to purchase a vehicle using your EIN only, and I'm gonna link that video right here. So if you're planning to purchase a business vehicle, remember this: an EIN does not just allow you to write off mileage, fuel, or depreciation. It becomes the key that unlocks true separation of credit, liability, and ownership. And with the right structure, the vehicle finances under the business report to your business credit report, and you will not have to worry about it touching your personal credit in most instances. This is one of the strongest advantages of being a business owner and using your EIN number. So finally, the most important reason to apply for an EIN is so that you can start building business credit. So how do you actually begin building business credit using your EIN? Well, the process is not complicated, but it does require discipline. Once your EIN is registered, you open a business bank account under it. You also establish vendor accounts that report to business credit bureaus, and you pay those vendors promptly. And then you gradually apply for business credit cards and use those cards responsibly. The key word here is responsible. Every payment you make builds credibility, credibility builds influence, and that gives you future loan approvals. When you use your EIN strategically, you can separate business liability from personal liability, and that means your business may qualify for loans even if your personal credit is not exceptional. Now, this distinction takes time to build, but it does pay off when done correctly. You want lenders to view your EIN and immediately see a profile that is reliable. However, I do want to note, and let me look at the camera so I can definitely make this distinction very clear to you. This does not make up for having bad personal credit. I really want to make that distinction. It does not mean that just because you have an EIN number and start building business credit that your personal credit no longer matters. This is not how funding works, especially in the early stages of a business. Yes, your EIN in business establish a separate credit profile, and yes, it can eventually stand independent from you. And yes, there are lenders who issue credit solely under your business and your EIN, but that separation takes time, history, consistent payments, and financial proof, meaning your business has to make money. You have to have money. If you want to lean into EIN only everything, you have to have money, because what else are they going to look at? Like, they have to know that you can actually pay them back. So in the beginning, most lenders lean on your personal credit because your business has not yet built enough financial stability. When your company is new, when assets are limited, and when your cash flow is still developing, the bank wants reassurance that someone can repay the debt. This is where a personal guarantee comes in. A personal guarantee means you are agreeing to take financial responsibility if your business cannot pay something back. It's a safety net for lenders and for most startups, and it is usually required. To really maximize EIN only financing, to really maximize making money from your business, you're going to have to make a lot of money from your business, and then you'll have to put that into assets that then you can leverage to get business funding with EIN only. And I'm sure you're thinking that at that point, well, I have so much money, why would I care? But it does become important. Leveraging money is a great way for damn near every single great business in America to actually become a multi-million-dollar or even billion-dollar corporation. So always keep in mind, as your business strengthens, as your limits increase, as revenue scales, the personal guarantee becomes less necessary. For example, I doubt that whoever the CEO of Apple is right now, they have to use their personal credit to get assets. I know that's a big, huge gap for a corporation like that, but I hope you kind of see what I'm saying. You don't want to limit yourself to just getting business credit cards, to just credit card stacking. You need to have a cash flowing business. I have plenty of videos on this channel that most people don't watch because the headlines or the title doesn't catch your attention because it's not easy. But I guarantee that if you're actually trying to make money, if you're actually trying to cash flow, if you're actually trying to change your life, I have videos that will show you how to actually make money from your business if that's actually your goal, and your goal isn't just to get a couple of credit cards. But in your first phase of growth, do not be surprised if lenders still look at you, the owner, to determine risk, because your personal credit reflects how you handle debt. Your EIN reflects how your business will handle it. Early funding decisions often consider both things. I want to thank you guys so much for watching this video. If you found value in this content, please drop a comment below letting me know that you made it all the way to the end. You can even drop a comment that says EIN, especially if you want more content that's similar to this, as far as having your business structured properly and things like that. I already have a few videos planned for 2026, and I definitely want to make sure that you guys subscribe so you don't miss any of that content. Once again, thank you guys so much for watching this video, and you have a wonderful day.